Here's the sad truth that most homeowners don't realize. You're gonna pay more interest back to the bank than the actual cost of your home itself. Here's a client scenario. He would end up paying $352,000 back in interest and he only owes $304,000. You could literally pay for your home twice. But here's how we flip the entire script on the mortgage industry and using one strategy. We use our first lien HELOC and we completely flip the script on how mortgages get paid back. As consumers, we've been brainwashed to think there's only one way to pay our home off faster, and that's either throwing more money towards our payment every month or doing some funky scheme like making bi-weekly payments. But what if I could show you a way to pay your home off faster without having to change any of your spending habits whatsoever, and utilizing our HELOC strategy as your checking account? You can literally pay off a home in years instead of decades. We're gonna do a refinance on this property to take some equity out, pay off some debt, and get this guy into a position where he can start buying some properties and actually buy some animals for his farm. We're gonna borrow $304,000. I'm comparing this to a 6% interest rate today. He brings in about $6,000 a month. And because we don't need all of our equity up front, we're actually gonna take a portion of it and deposit it back into the HELOC. This is one of the beauties of how you manage the HELOC, is that you can use the funds as you see fit. So for this guy, we're gonna consolidate about $100,000 or so worth of debt into the HELOC, and then the other $180,000 is gonna sit there until we have the right vehicle that we can invest it in. For this guy, we're gonna be buying some animals for the farm, and he wants to buy some real estate. So until we get the debt situated, we're gonna leave this money on standby. And like I said, we use our HELOC like our checking account. So we got $6,000 a month going in, and then he's gonna have about $3,600 left over after all the bills and expenses are covered. So here's your 30-year fixed mortgage, which we hate. And here's our HELOC. Our credit limit's $304,000, but we're only paying interest on the $100,000 or so that we're borrowing. And we're gonna pay that off in 27 months, and it's gonna save him $338,000. The average interest rate on this loan is 7.7%. Now you remember in a lot of my videos, the rate was 8%, but the Fed made their rate cut announcement a few weeks ago. So we're starting to see some of these HELOC rates come downwards. Because our interest rate is a variable rate and it fluctuates every month, and we pay interest on a daily basis, we still only pay 13 grand in interest, which would give us an effective rate of 0.294%. There's two phases with this loan. The first phase is really paying it off as fast as you possibly can. The second phase is then using the line of credit to go create more income for yourself today. And like I said, with this guy, he's already got a plan in place, except now we can speed everything up because we can get rid of his bad debt, and I can give him a $300,000 line of credit he can use to grow his business. You want to learn how to do this? Send me a DM and I'll teach you how to do it.